Hi, I'm Patu from freefincal, and today let's talk about if the market is overvalued or what is the state of the market as on late November 2019. We just saw the Sensex and the Nifty move past record values, and they are now at pretty much close to their all-time highs. Sensex has gone past 41,000 and so on. So this will be a good time to have a look at the state of the market. Before we begin, this is only for those who want to do tactical asset allocation, that is, who want to change their equity allocation in the portfolio as per market conditions using trend indicators or valuation indicators. This is not for those who are waiting to invest some money on a dip. That's such a waste of time. Invest systematically, but if you want tactically asset allocate the existing investments, if you want, or you can do goal based risk management, but invest systematically. Buying on dips is such a waste of time. Don't do it. I have shown this already. There's a video on this. You can have a look at it. So these charts that you're going to see are based on this tool. This tool is not free. It's available for purchase at freefincal. I'll leave the link below. If you're interested, you can use any. You can consider look at the features and buy it. You can use any index and evaluate whether it's cheap or expensive in multiple ways, like trend, volatility, valuation, and so on. I only have shown some of the features here. So what you see here is the Nifty 50, which is the blue line, and the 6-month moving average, exponential moving average. The exponential moving average is a form of the daily moving average. So in the daily moving average, you just take the last 6 months daily price and average it. The exponential moving average is a slight modification from that. It gives more weight to recent price movements than the past price movements. And the 365-day or the 1-year moving average is shown in green. Notice that the red line is significantly well above the green line since 2017 onwards. So that is a bullish kind of market we have been in. But the price itself is currently well above the red line. You can say that's overpriced if I just look at that. But you can say it will correct, but you cannot say how much it will correct. This is the point which most people fail to understand. It can correct only a little. See, for example, this is a small correction, that's a small correction, that's a small correction, that's a small correction. 4 corrections from March 2018 itself, and these are corrections only in hindsight. You don't know that, and so you don't know the value. So if I look at it, it looks as if the market is bullish, overpriced possibly. The next comes Bollinger Bands. So what you do in the Bollinger Band is to plot the 200-day moving average, which is a red line, and then you plot a line which is on top, which is 2 standard deviations above the average plus two standard deviations, which is the top line, average minus 2 standard deviations, which is the bottom line. Now these two, the upper and the bottom bands, if they become wider and wider, that means the market volatility is high, and if the price is above the upper band, then there's a correction imminent. You can see here the volatility is high and the price is above the upper band, and the price and the thing has come down. But again, you don't know how much. But if the price comes, the bands narrow and the thing is moving up, then it could mean there's some more. The market could continue moving up. The price is certainly. The bands are not coming down, but it's more or less static. But it's lower than the volatility is lower than what it was in April, July 2018 or so, and the price is higher than the upper band. So you don't really know whether it will correct or not, whether it will just keep moving. You just don't know. It's hard to interpret that. Sometimes that's what happens. So now what you see here is the Nifty 50 price to earnings ratio, which is the blue line. The 10-year moving average of the Nifty PE is shown here in the red line in the center. 1 standard deviation above the average is this line, 2 standard deviations above is that line, 1 standard deviation below is this line, 2 standard deviations below is that line. So you call this plus 1, plus 2, minus 1, minus 2. Notice that the average itself has gone from less than 18 in 2008 to close to 22 in 2019. So what is a high PE in of itself is nobody knows. It's changing every day. And the Nifty has been trading well above plus 1 since 2014, I would say. It's been higher, then it fell down, corrected sharply, and then it moved up, corrected a little bit, then it moved up. And then at least since late or mid 2017, it's been above plus 1, and it's been going between plus 1 and plus 2. Currently now it's heading towards plus 2. You don't know whether it will come down. before heading to +2 or go and then cross over? You just don't know. But you can say the market is kind of overvalued, but with respect to what? What is a high PE? What is a low PE? Nobody knows. It's not easy. Probably the price to book ratio is slightly more sensitive, slightly, uh, I mean, less confusing, I would say, at the very least. And again, you have the 10-year average. It's not changed too much. And you can see here, since March 2017, the Nifty PB has been above its average, and only it has corrected going to +1, and it has corrected sharply. Then it went up to +1, stayed there for a while, and then it came down, and now it is close to +1. So it could come down, but you don't again know when and how much it will correct. So yeah, it's kind of overvalued, but I mean, nobody can predict the future. It's easy to comment. Moving over to the mid cap, Nifty Midcap 150. Notice that the 12-month, sorry, the 6-month average, which is the red line, is below the 12-month average, and the price is also more or less close to the both these averages. So which means that the price and the market, I mean, there is a lot of space for the things to go up. It's not overvalued in terms of price alone. It can go up. And if you look at the P, again, it's not really overvalued, you would say, because and also there's not much of history to talk about what is a high PE, what is a low PE here, and so on. But currently, the value is close to its 10-year average. I mean, it's kind of more or less valued right, you can say. But if you look at the PB, the price to book value of the Nifty Nifty Midcap 150, it's significantly higher than the 10-year PB average, close to almost +1. It could go up, or there's some space for it to go up maybe. I read some article saying that the mid-cap stocks can go up because there's a PE support, but probably because the PE is low and so on. Excuse me, I'm not so sure about that. I mean, it's not. It's about just more or less rightly valued, I would say. So that's the tool. You can have a look at it. In summary, if you look at the large cap space, the volatility is lower than in the recent past, but the PB is close to one standard deviation above the 10-year average, meaning it could go up. The market and the large cap stocks could go up, but not much. In the mid cap space, again, the PB seems to indicate high price mid cap stocks. But then the history is too short. You don't know. The volatility, though, is low. I'm not sure if I've shown the Bollinger Bands for the mid-cap here. You can look at that in the article. I forgot the Bollinger Bands for the mid-cap space here. The volatility is kind of low, so there is some chance for it to move up. But we can't expect too much from it. So you can see that different indicators show different things. This is what happens. It's basically like a blind people touching an elephant. You don't know. So you have to take a call. So if the tool is useful, you can have a go at it. Let me know what you think about all this, or if you have a different opinion than mine. Catch you later. Bye bye.